For the first time in 10 months, Bitcoin, Ethereum, and other coins appear to be trembling, and the crypto market seems to be tumbling hard and experiencing difficulties because of the worldwide inflation. The market is collapsing, and whales may come into stock up before the market recovers. Some coins may even go extinct, according to rumors. But before we jump in the video, please make sure to like the video and subscribe to support our channel. How big is the cryptocurrency market today? According to CoinGecko, the most popular cryptocurrency, Bitcoin, reached an all-time high of more than $68,000 in November, boosting the crypto market's worth to over $3 trillion. And the total was $1.51 trillion on Tuesday. Bitcoin accounts for over $600 billion of that value, with Ethereum coming in second with a market worth of $285 billion. Despite the exponential growth of cryptocurrencies, the market is still relatively small. The value of the US equities markets, for example, is $49 trillion. In comparison, the Securities Industry and Financial Markets Association estimates that the outstanding value of the United States fixed income markets will be $52.9 trillion in 2021. Following a brief recovery on Wednesday, Bitcoin, BTC, dropped back into the red on Thursday as crypto bears dominated markets. Bitcoin/USD fell to an intraday low of $26,350.49 yesterday, less than 24 hours after peaking at $31,868.30. Today's low is the lowest level for Bitcoin since December 2020, when markets surpassed $30,000 for the first time. This current wave of crypto bears comes as the price of Luna has dropped even more in the previous day, presently trading below $0.0001. Today, USDT lost parity with the dollar, causing even greater volatility in crypto markets as traders rushed to sell their positions. Is now the time to buy the dip after crypto crash? Following the Fed's rates last week, the Bitcoin fell along with other risk assets such as tech stocks, putting them on a path to pass 3% early next year. During the previous Fed tightening cycle, from 2016 to 2019, Bitcoin was a unique asset on the fringes of finance, barely correlated with stocks. The last time interest rates reached 3% was in 2008, and it was only a gleam in Satoshi Nakamoto's eye. Schiff believes that buying the dip is not the best option right now. The famous gold proponent, Peter Schiff, tweeted why cryptocurrency investors should not always buy the dip, citing the Luna case. Luna was down 98% yesterday. If you purchased the dip believing the fall would create a good buying opportunity, you lost 99.3% today, the American businessman explained. The Luna scenario could happen to any digital currency. Schiff tweeted a few hours later that the cryptocurrency was down another 50% from when he first tweeted. Joe Rogan is saying that Bitcoin is freaking out the government. Joe Rogan, the famous podcaster and the host of The Joe Rogan Experience, discussed Bitcoin on his show, which was broadcast on Tuesday. Khalil Rountree Jr., a UFC light heavyweight fighter, is interviewed on the episode. "I think about Bitcoin the same way I think about the early internet," Rogan explained to Rountree. He added that the government didn't see it coming and said, "It is now a viable form of currency. You may use it to make purchases. I believe that the government is freaking out." He expressed his expectations of the government, noting that they attempted to restrict the internet during the Obama administration. However, everything fell apart because many were angry and decided the political consequences were not worth it. As a result, they stepped back, Rogan explained. The popular podcaster believes that the government will eventually implement a centralized digital currency, similar to what China is doing. He highlighted that they would attempt to introduce digital money, a centralized digital currency that they will be able to control. What scares Rogan about the government's centralized digital currency is that they can look at you and your online activities and decide what you can and cannot spend your money on. He warned, for example, that the government may allow someone to spend money on food but not on trips. Rogan stated in January that he had great confidence in cryptocurrencies, particularly Bitcoin. However, he said that he didn't fully grasp it. "What we're witnessing right now is that it's either going to fall apart completely, or we're going to take this as a chance to right the ship and come up with a better way to live our lives," he said. Could a crypto crash hurt the financial system? While the entire crypto market is relatively small, the United States Federal Reserve, Treasury Department, and the International Financial Stability Board have identified stablecoins, digital currencies pegged to the value of traditional assets, as a possible danger to financial stability. Stablecoins are primarily used to simplify the trading of other digital assets. They are backed by assets that may lose value or become illiquid in market stress, and the regulations and disclosures controlling those assets and investors' redemption rights are unclear. According to authorities, this might leave stablecoins vulnerable to a loss of investor trust, particularly during market stress. According to CoinGecko, Terra USD maintains its connection to the dollar through an algorithm. An investor who runs on stablecoins that keep reserves in assets like cash or commercial paper may cause stress in those underlying asset classes and regulators. Other concerns are rising, say, regulators, as more companies' fates are connected to the performance of crypto assets and traditional financial institutions get increasingly involved in the asset class. In March, for example, the acting comptroller of the currency warned that crypto derivatives and unhedged crypto exposures might trip up banks since they are working with little historical price data. Nonetheless, regulators are split on a crypto crash's damage to the financial system and the broader economy. How can you protect yourself and even benefit in a market crash? Even the most confident and innovative market will suffer a correction. This is a fact that is ignored all the time. Multiple factors can cause these events, making them more challenging to predict. It's wise for traders and investors to stay updated with the market. However, this is not enough, because everyone is taken by surprise sometimes. All things considered, there is no better moment to open a position than after a significant move. Trading is not the best method to make money, but it may be a great way to build wealth. Large moves up or down give huge trading possibilities. The only difficulty is that this does not have to be done daily or weekly if you want to produce a monthly income. The benefit of a failing market is that it also generates opportunities. After a large correction or crash, the best deals or investments are made. Before you go, please make sure to like the video and subscribe for more crypto content. Thanks for watching.